Nike just dropped their Q3 earnings for fiscal 2026, and honestly, the numbers tell a fascinating story of pressure and transition. So in this breakdown, we're going to dig into the key figures from their official release to really understand where the company stands right now.
Okay, just a real quick heads up before we dive in. This analysis is purely for educational purposes, and it's all based on public filings. It is absolutely not investment advice. All right, so here's the game plan. We'll kick things off with the big picture numbers. Then we'll dive into the company's financial health and see how the core footwear and apparel divisions are stacking up. We'll also look at the diverging global markets, hear from leadership, and then wrap it all up with the key takeaways for investors. First up, let's zoom out and get a look at the big picture. We're talking the main headline performance for the quarter. Revenues for the quarter came in at $11.3 billion. Now, that's a huge number, right? But the real story here isn't just the size of that number, it's what it isn't doing. And that trend, it's flat. Totally flat. On a reported basis, that's 0% year-over-year growth. So the top line is basically stalled. In fact, if you strip out currency fluctuations, revenues were actually down 3%. So not a great start. And that stagnation at the top, well, it had a massive impact on the bottom line. Diluted earnings per share landed at just 35 cents. That is a sharp 35% drop year over year, which is a huge red flag that tells us right away that something's seriously squeezing their profits.
So what's going on here? If revenues didn't really fall, why did profits crater like that? To figure that out, we've got to pop the hood and decode the company's financial health, starting with a closer look at the income statement.
Okay, so this table lays it all out pretty clearly. Look at the top line, revenues basically flat. But then look at gross profit, down 3%, and net income, yikes, down 35%. So the problem wasn't how much they sold, it was how much it cost them to sell it, plus other expenses. And that leads us straight to a super important metric, gross margin. Think of it as the profit they make on each product before all the other corporate costs kick in. For a company like Nike, it's a fundamental sign of how healthy their core business actually is. Now, this chart really paints the picture, doesn't it? You can literally see the squeeze. Gross margin got compressed by 130 basis points. It fell from 41.5% last year down to just over 40%. That's a huge piece of the puzzle right there, explaining that weak performance. So, what caused it? Well, Nike's report points a finger at one main culprit, the financial hit from higher tariffs, right in their biggest market, North America. And it didn't stop there. The squeeze on profits got even tighter because other costs were going up too. Things like selling and administrative expenses rose by 2%, and operating overhead was up 3%, which the report notes was partly because of employee severance costs from their restructuring efforts. All right, let's slice the pie a different way now. We're going to look at Nike's two main product engines, footwear versus apparel, because this is where things get really interesting. It's really a tale of two Nikes right now. You've got one part of the business that's still pushing forward and another that's kind of stuck in neutral. And the numbers back that up completely. Footwear, their bread and butter, managed to grow by 2%. It's not explosive, but hey, it's growth. But then you look at apparel, zero. Flat as a pancake, with no growth at all year over year. So what this tells us is that Nike is really leaning on its footwear division to do all the heavy lifting right now. That reliance could be seen as a bit of a risky spot to be in. Okay, let's switch gears from what they're selling to where they're selling it. Geographically, we see an even bigger, starker split between their most established market and what's supposed to be their biggest growth driver. So let's put North America and Greater China head to head. This is a classic matchup, the established giant versus the high-growth engine. And wow, what a difference. North America actually looks pretty solid, up 3%. For a market that big and mature, that's not bad at all. But then you look over at Greater China, and it's a 7% decline. That's a big deal, because for years, China has been the rocket fuel for Nike's growth story. So we've got this mixed bag of results, right? Flat sales, falling profits, and these weird splits between divisions and regions. So what is management saying about all this? How are they framing the situation?
The CEO's comment here is very deliberate. He talks about taking meaningful actions to improve the business. He's basically saying, hey, we know things are tough right now, but this is all part of the plan. We're in a transition and we're cleaning house.
The big message from the top is basically this.
were playing the long game. They're focused on these win-now actions, which tells you they're willing to take a hit on results this year to get the business on stronger footing for the future.
Okay, so let's pull all of this together. If you're an investor, what are the absolute must-know takeaways from this quarter's report?
In summary, the story is pretty clear. First, the top line is stalled and the bottom line is getting crushed. Simple as that. Second, footwear is carrying the whole company, while apparel is dead in the water. Third, there's a huge divide between a solid North America and a really weak Greater China. And finally, management is framing all of this as a necessary, if painful, transition.
So this leaves us with the big question, right? As Nike goes through this makeover, what should we be watching for? What are the signs that'll tell us the turnaround is actually working? Is it margins bouncing back? Is it China turning positive again? Or will the apparel division finally spark back to life? Those are the key signals to watch in the coming quarters.
For more deep dives just like this one, be sure to like and subscribe.